Hey, welcome back to YT Finance, and today we are talking about the top best stocks to buy right now. This list will include growth stocks, technology stocks, and metaverse stocks, along with some blue chip stocks mixed in. I will also be going over what the companies do, their recent financial performance, and their current stock price targets by analysts. On top of that, I will provide each company's fair value price, which is what the company is actually worth right now according to their finances, so you can determine if you want to start a position or add to an existing position. Go and press the like button right now for more stock analysis videos like this one. Comment down below your favorite stock right now. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. The first stock on our list is Fiverr, ticker symbol FVRR, which is an online platform that connects freelancers to buyers. The company makes money by charging a 5.5% service fee to the buyers, and they take a 20% chunk of the transaction amount that the freelancer charges. Surprisingly, this business model has worked extremely well for Fiverr because in the past 5 years, their revenues have skyrocketed 260%, and in their most recent earnings report, their revenues jumped by 42%. The company also has massive growth potential because their addressable market is worth $115 billion annually, and right now Fiverr is only scratching the surface of that market. The current FVRR stock price is $147 per share, the low-end analyst price target is $170 per share, and the high-end analyst price prediction is $270 per share. Next up, we have MongoDB, ticker symbol MDB, which has one of the best cloud-based database platforms offered on the market today. Some investors will go as far to say that they believe that this company alone is the best option and only real choice to build modern application in today's environment. Now, I do want to say that this company's shares are very expensive, so you may want to wait for a pullback so you don't have to pay such a high premium. The stock currently trades at 50 times their sales at a stock price of $518, which is why their fair value is only $288. Analysts have a low-end price prediction of $410 for this stock and a high-end price target of $700 per share by next year. Next up, we have Trupanion, ticker symbol TRUP, which is a company that offers insurance for people's dogs and cats. Trupanion is a leader in this market, and they have over 1 million pets enrolled. According to their last earnings report, they seem to be doing well financially because they experienced a 40% year-over-year revenue growth rate. The company also has lots of room to grow because they only have about 2% market share in an industry worth billions. Their current stock price is $126 per share, their low-end analyst price prediction is $97, and their high-end price target is $158 per share for 2022. A great stock that has been hit hard lately by a recent sell-off is PayPal, and when a big name like PayPal dips, I think it's a no-brainer for a buying opportunity. Many great companies have been pulling back recently, which includes the likes of Square, Visa, Upstart, and Lemonade, which are all either down 13% or more, which provides investors like us a fantastic opportunity to determine if we should buy this dip or not. If we look at the graph on screen, we can see that Upstart is down a whopping 40%, and a more established company like PayPal has also been hit very hard because it's down around 21%. However, if we compare these companies against the S&P 500 index, which has gained around 3%, these companies look too beaten down for us to ignore. Now, this does not mean that PayPal is all of a sudden a bad company to invest in, because they are still a company that provides amazing cash flows and its core business is still very strong. So it begs the question, why is PayPal falling right now in price? Well, the answer to this is simple. Wall Street will not stop talking about how PayPal had lower than expected growth numbers in their recent earnings report, so this has made investors overreact and start to sell their shares. But to me, the company is still amazing. They brought in around $24 billion worth of revenue in the last 4 quarters and $5 billion worth of free cash flows. So I think that investors are clearly overreacting and the stock price will bounce back eventually. Now, in an ideal world, it would be a steal to buy PayPal stock under $151, which is their fair value price, but right now the stock trades at around $187, which is still a pretty good deal. Analysts have a 1-year price target who are bearish on this stock for $175, and the more bullish analysts have a $366 price target for 2022 for PayPal stock. So depending on where you land, this could be an amazing buying opportunity for you. Next up, we have Twitter, ticker symbol TWTR, which is a social media company. Right now, their shares have fallen by around 30%, which is a very steep sell-off, and this sell-off comes from the fact that investors are starting to think that Twitter is running out of room to grow in the social media space. But let's take a closer look at this assertion before we start selling shares. Twitter is not growing its customer base like it used to, but that is expected to happen with such a large company. Twitter is also using their current clients very wisely. To give an example, Twitter announced a partnership with S&P, the same company that does the S&P 500, and they're going to use Twitter to collect data regarding investor sentiment, whether positive or negative, about the S&P 500 index. Twitter also renewed a partnership with Viacom CBS, so Twitter is still making the most of their company, and I really admire that. Now, it's not like these partnerships are game-changing in any way, but they are enough to say that Twitter may also be oversold like PayPal. For instance, Twitter still brings in a healthy amount of revenues from their ads, and the data shows that Twitter could grow by 21% next year. The current stock price is $46 per share, while their fair value is $58. The low-end analyst price prediction is $33, while the high-end analyst price prediction is $86 per share. Now, I tend to love when stocks trade below their fair value price, but remember, there are a multitude of ways to calculate fair value, so please remember to do your own research. Next up, we have Globant, ticker symbol GLOB, which specializes in product engineering and IT consulting. Their services are extremely valuable to companies in analytics, blockchain, cloud computing, and cybersecurity. They even have augmented coding, which can predict computer code to increase the time it takes to develop software. If you look at the chart below, they have also done a great job by increasing their customer count and their revenues. The company can easily maintain their current momentum because their addressable market will be around $154 billion by 2022, and they also have a Metaverse studio which will help companies build their Metaverse experiences. According to International Data Corp, companies in totality will spend around $6.3 trillion on digital transformation between 2022 and 2024, which just adds to why this company is such a great buy due to their Metaverse studio. Their current stock price is $256 per share, their low-end price target is $330 per share, and their high-end price prediction for next year is $407. Next up, we have Zscaler, ticker symbol ZS, which provides a service edge platform that spans 150 global data centers, and the reason this company is very relevant right now is because when employees are working from home or at an off-site location and they need to access corporate data from another location, they need to have a safe way of doing this without any data leakage. The research company named Gartner has said that Zscaler has been the industry leader for 10 straight years, and that the title remains theirs because they have a more complete platform and a track record that no competitor can even get close to. If we look at the chart below, we can see that they are also increasing their customer base and revenues very nicely, which is a great sign of the company scaling. Zscaler also has plenty of room to grow because they have an addressable market of $72 billion, and they are currently worth around $46 billion. They are also set to outpace the overall market, but in my opinion, investors are paying a heavy premium for the stock right now because the stock price is way above their fair value. Their current stock price is $336 per share, and their fair value price is $205. Overall, their low-end price target by analysts is $266, and their high-end price prediction is $500 for 2022. Lastly, I want to briefly talk about Sofi technology stock, ticker symbol SOFI, because investors are complaining that insiders are selling it. For instance, an executive director just sold around $218 million worth of shares, which reduced his holdings by 20%. But again, I would not worry about this. If anything, I wish the stock price would go lower and this causes people to sell, because once the stock price is around $14, I'm going to buy way more shares. This would give me a cheaper average cost, and it would enhance my long-term gains for the stock. Right now, Sofi stock trades for around $18 per share, while their fair value is $22 per share. Their low-end analyst price estimates come in at $16.50, while their high-end bullish analyst price target is $30 per share in 2022. But what do you think? Comment your thoughts down below, like this video right now if you haven't already, subscribe if you are new, and I will see you in the next YT video.